on the ET Money Show, we make sure that we don't just talk about investing in mutual fund, but also help you meet the face behind these funds. Now, in this week's Meet Your Fund Manager, we are joined by Anupam Tiwari, who is the fund manager of Axis Smallcap Fund. Let's take the discussion forward with Anupam and understand the fund's investing strategy and philosophy. Anupam, good evening and welcome to the show. Let's talk about the overall situation in the equity markets right now, where we've seen so far the year has not been very great for the investors and even for traders. Sticky inflation and also what happened with the Adani group of companies. Analysts are especially expressing concern over mid-cap and small-cap category. What is your analysis of the market situation so far this year and focusing specifically on small-cap companies and the results?
Here, see, if you look at from a broader market perspective, we have had a very good calendar year 20, and then 21 was good. So some kind of consolidation and adjustment was warranted. And we also went through a lot of very volatile phases like Russia-Ukraine war, then US interest rate hike, etc., and the recent events that you mentioned. Coming to small cap investing, the small caps require very long-term time horizon for you to make good CAGR. And of course, there are phases when they do very well, but then also they fall significantly. And we have seen historically it also. So it's a very volatile category. And the answer to volatility is time. There is nothing else that you can do at a broader level. So from short-term perspective, difficult to say. The way things are moving globally, locally, a lot of uncertainties with respect to inflation, how demand will pan out, US and Europe economy going through its own turbulent time. So short term, it's very difficult to say how things will pan out, but medium to long term, and when I'm saying from a small cap perspective, medium to long term means 5 year plus. Ideal time is like 8 to 10 years. Then the small caps have a very good potential in India to create shareholder wealth or investor wealth. So I'm quite optimistic, and a lot depends on how you select company, how you create portfolio, but the opportunity is very good.
No, there's no doubt about it, because in a portfolio, if we even look at the understanding of diversification, having a small cap category becomes very crucial in your overall portfolio planning. But then before this, I really want to understand the FPI withdrawing or deserting the Indian market and your concern over it, because so far the data that we've seen, the kind of money they have pulled out in this month is around 9,600 crores, and alone in January we all know the number that's reported is above 28,200 crores. Do you think domestic valuations and the kind of valuation currently emerging markets are offering, India is really expensive, and the FPIs will continue selling, and this might just get deeper in coming few months or quarters? Is that a concern for you?
Not too much, really, because see, these things will keep on panning out, right? Sometime investors will go out of the country because they find, or they perceive that opportunities somewhere else are better, or they may just be worried about certain macroeconomic situations. For example, we may have issue if, let's say, there is more than expected rate hikes in US, etc. Investors also go out because they have made great money, and they have made good returns, and they just want to diversify your cash out. So the flows will not drive your return over medium to long term. And once again, I'm trying to harp on is that short term, yes, these things will play out. These things will impact market overall market performance. But over medium to long term, flows is an outcome, right? It's not the driver for the market. It is earning and growth. That is the driver for the market performance. And if as a country, as a overall market, we keep on delivering good performance, then flows will come back. So one should not be too much perturbed about if you don't have a very short-term time horizon.
What are you banking on when it comes to the small cap space? What are the sectors that you are tracking? And while it's very important for an investor to have a long-term view, but also what investors need to understand is the fund's performance. And if they see their peers performing performing better, there's definitely a question in the investor's mind on the fund's performance. So what exactly is your strategy? What are the sectors and stocks that you are betting on? And even if your view is of long term, what kind of a strategy would actually make an investor hold on to your fund when it comes to comparing it with the peers' performance?
Yeah. So basically what we do is that if you look at our perspective about small cap investing is that the fatality rate in smaller companies is very high. When I say fatality rate, it means there are very few companies in a small cap space which are able to scale up and become large or mid cap companies, right? So we look more from a risk perspective rather than from risk return perspective. What I'm trying to say is that if you get a good business run by good people and it's a small, it scales up, you are almost certain to make money out of it, right? Or let's say next 5, 7, 8 years, it keeps on doing well. We have to focus on what can make it not do that thing or not grow or not scale up its business. What will make it not create growth profitably, So we start from risk. And we have 4 risks that we have identified. It's basically the management risk, the business cycle risk, and valuation risk. So we assess every stock and we create all bottom-up portfolios. We don't bother too much about sectors, sector allocation, etc., etc. If there is a sector overweight, underweight, it's just a function that we like companies in that sector much more than any other sector. We generally don't have any sectoral MIS kind of thing that we keep on looking. It's purely bottom-up stock picking that we do in a small cap. We assess every company on these 4 risks, whether they stand. The first 2 risks, that is the promoter risk or the management risk and the business risk, we try to never take that risk, irrespective of valuation, etc., or business cycle. And third risk, we try to eliminate as much as possible, but given that there is a human limitation to see the future, we sometimes go wrong. And fourth risk is the least important risk, in my opinion, in small caps. It's very, very important, but it's least important as compared to other 3. And if we get the business right, if we get the promoter right, a very capable promoter who has good corporate governance practices, the business is good, is scalable, generates good ROE, ROC cash flows, and we are reasonably good business cycle, we are willing to pay a premium on valuation. So I'm not too finicky about valuation, etc. Because what we are looking at is a time horizon of 5, 7, 8 years. If companies do well, even if you pay a little bit of premium on the company, that's fine. You will still able to make some money. If you are buying just because something is cheap and it's not good, the promoter is not good, not competent, business is not good, then sure shot you will lose money because small caps are very volatile and very illiquid. So you cannot exit them. Especially at our size, when we own large chunk of companies, as an institutional investor, it becomes very, very difficult to exit. So that is how we look at whole small cap space. And inherently, if company is good, business is good, they are competent, eventually we will create money out of it.
Sure. Anupam, I also want to understand your strategy in top 4 to 5 sectors which are laid down in your fund, which is chemicals, healthcare, financial, and technology. What's the kind of story that you are seeing building over few quarters now, if I can just say, and why financial is also on number 3 and not number 1?
Mm-hmm. Okay, so let's answer the last question first. Financials in small cap space, there are very, very rare good companies that you can own. So we like the space, but it's mostly concentrated on large cap side, where we like the companies. In a small cap space, there are not too many companies which we can own peacefully. There are okay companies, decent companies, but their performance has been quite volatile, or the valuation is beyond something that we would like. So that's the reason why we don't own too much of financials. Generally, we avoid owning any large cap stock in our small cap fund. So we want to remain true to the label. So that's the reason we don't own too much of financials in our fund in small cap. Other sectors that you asked, chemicals and healthcare, etc. Yes, we like those sectors. In chemicals, we want to remain with companies who have good amount of capability or competence in terms of product development, in terms of technology that they possess, and also where the client dependence is reasonably high. And we prefer global companies. We don't want to buy purely Indian companies. Maybe one or two companies where we have small exposure there we own, where companies are purely local. We don't want to own too much of commodity chemicals unless and until it's very competitive values. We generally want to own companies which are developing some kind of new products or new technologies. So that's our thought process on chemicals. It's a very, very exciting opportunity that we have because slowly as companies are becoming larger, their balance sheet is growing, their ability to reinvest in R&D, their ability to develop new product, etc., is growing. And that will help them to gain market share and grow in future. So that gives us a lot of excitement. Global markets are very large. Opportunity size is very large. Indian companies have been quite prudent. Some of the Indian companies who have been very good in capital allocation, who have remained focused, who have tried to keep on developing new products and maintain profitability. So those are the companies that we like. In the healthcare space, it's a large population and government ability to invest significantly in healthcare is diminishing, right? Because you cannot create new and new hospital from the government side. And talent availability is also quite bad in government sector. So this sector inherently offers you a very, very good opportunity for long-term potential.
Exactly. And that should be the focus if at all you're invested in any small cap fund. Thank you so much, Anupam, for being on the show and guiding our viewers on